Well, the African continent accounts for 18% of the global population and 6% of global beer volumes. The world's second largest beer producer, SABMiller, has the highest exposure, followed by Heineken and Diageo. Now, South Africa is the largest beer market with over 25%, followed by Nigeria. Joining me to discuss this, we've got Trevor Sterling. But before we go to Trevor, I'd just like to show you some graphs up on the screen here. And this just shows you Africa being dominated by three key players right now. SABMiller, we know it also owns 20% of Castel, which has operations across Africa. When you're looking at the contribution of Africa to overall group equity adjusted EBIT, you've got South Africa accounting for 20% of SABMiller's earnings before interest and tax, 9% of that coming from Africa. So overall, almost a third of their earnings coming from, for SABMiller coming from Africa. Heineken, you go down to 16%, and the Diageo, 5% of their earnings coming from Africa right now. And in fact, SABMiller and Heineken controlling around 56% of the African beer market and around 59%, so almost two-thirds of the African beer profit pool. So really saturated market when you look at it on that front. Let's just take a look at how beer consumption has been driven globally by Africa. Africa accounting for around 10% of beer consumption growth over the past decade. So that is a number to take account of, given the fact that Western Europe has accounted for, has offset that by 6%. And you look at Asia Pacific on this graph, 63% of the growth in beer consumption has been, over the last decade, has been driven by Asia Pacific. But of course, Africa is said to be a lucrative market if we're looking into the future, given that there's a growing middle class and the current levels of consumption still sitting at very low relative global levels. So let's get into all of this. Trevor Sterling, European beverages analyst at Stanford C. Bernstein Limited, is joining us from London. Trevor, thanks for joining us. So let's just take a look at your forecast. You see Africa as the most lucrative region in the world when it comes to future growth. And of course, we're talking about companies like Anheuser-Busch, we're talking about Heineken, we're talking about Diageo, we're talking about SABMiller, but Anheuser-Busch doesn't have representation here. But why do you see Africa as such an attractive future market?
Well, if you look at it in terms of per capita consumption, it's Africa and Asia where the big upside lies. And you've got huge countries in Africa, such as Nigeria, Ethiopia, but still at very low levels of per capita consumption. But the big difference between Africa and Asia is that Africa is very profitable. Africa is typically oligopolies, whereas Asia is dominated by China, and China has four large companies. Between them, they still only have 55%. As we describe it, it's a slugfest in China, and profit margins are much lower. So volume-wise, Asia's got plenty of potential, but we see more profit upside in Africa.
From a stock perspective, I mean, if you just look at the forward PEs for 2013 for the likes of SAB sitting at 23, it goes down to 20 in 2014, and you've got Diageo also sitting on a PE, but just under 20 there. I mean, are the stocks pricing in the African growth story, do you think, or do you think that it's really hard to analyze that right now, what it might be, and quantify it?
Well, I think a lot of it is in the share price now. In that respect, new investors are somewhat late to the party. Obviously, if you've been an investor in Diageo or SAB over the last 2 or 3 years, you're feeling very smug and happy. But I think a lot of that upside is now understood. And also, if you look at the quoted subsidiaries of these companies, so for instance, Heineken owns a bit over 50% of Nigerian breweries, which is also trading up in the 20s in terms of PE. Likewise for Diageo's subsidiary in East Africa, East African Breweries Limited. So I feel a lot of it is built into the share prices now.
Looking at Diageo, I mean, they have quite a strong presence in Africa right now. They've got Guinness, Nigeria, they've got East African breweries, and they certainly offer SABMiller a run for their money. What are your thoughts on the kind of SABMiller versus Diageo in Africa right now? Do you think that Diageo is strong enough to ward off stronger competition from SAB?
Well, I think in its core countries in Africa, Diageo is very strong. I mean, if you go to Kenya, you'll see everybody drinking Tusker, and that brand has huge local loyalty. And SAB will find it difficult. No doubt they will re-enter the Kenyan beer market at some stage, but it's not going to be as easy for them as they might hope. Also, Diageo's got another interesting angle in Africa, which is the future growth of spirits. I mean, today the upper middle class who consume Western-style spirits are very small in sub-Saharan Africa. But if you go to cities such as Luanda and Lagos, I think there's huge potential for brands such as Johnny Walker in those cities as well.
I'd just like to bring your attention to, of course, a comment coming through from the head of SABMiller Africa yesterday, saying that they see potential to cut prices in Africa. And of course, we know that profit margins in Africa are good, but they're not as good as Latin America. So what are your thoughts on the outlook for profit margins for breweries here, in light of course, the likes of SABMiller saying that they're looking to cut prices here of beer?
Well, I think SAB's got a twofold strategy. It's trying to encourage low-level consumers into the beer category away from the informal alcohol, at the same time trying to get people to trade up. So it's trying to lower prices for lower-income consumers, and yet at the same time get this bigger spread of pricing in Africa. Now, I'm not expecting any great big margin expansion story in Africa, because the brewers are having to put a lot of money into capital expansion to build new breweries, also putting money into advertising and marketing to encourage consumers into those premium brands. So I do think margins will grow over time in Africa. They're good, but they're not as good as Latin America, as you say. And it's likely that over time, as per capita consumption scale increases, so will margins. But it's definitely, there's a number of competitive markets. I wouldn't be forecasting massive margin expansion.
Thank you. Thanks for joining us, Trevor. Appreciate your time. Trevor Sterling, European Beverages Analyst at Stanford C. Bernstein Limited.